How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for the data collected on July 24th. Here's a snapshot of the positions being held by the institutions. And so let's take a look at gold, shall we? So this week's report is really important because we have price sitting in very specific spots where one of two things can take place. Either price moves up or price moves down. Price has been consolidating for quite some time now. So, when we take a look at the euro and the US dollar, for instance, we've had a certain feeling about these two charts on the direction that price is going to take. And so when we look at the data from this latest report, it's going to give us some insight as to what is about to unfold. But first, let's take a look at gold and see what the institutions are doing. So there's no doubt in our minds here that price is going to make a move to the downside. I mean, I think it's pretty clear, right? We've known that for a very long time. We've known that when price was up here. Okay, in fact, when price was up here, I was mentioning that price was going to eventually drop. And so over the last, let's see, 1, 2, 3, 4, 5, 6 weeks straight, we see that the institutions have been increasing their short positions. And it makes complete sense, because if price is going to be doing this, they would want to be holding short positions. So take a look at the sentiment. Sentiment is very bearish. Yes, a slight decline. Positive. Look at that. Positive 81, positive 57, positive 48. Slowly coming down to the minus territory. So if you take a look here, slight increase in longs, that means nothing to us. This is what we should be focused on. Them amassing an aggressive short position. So waiting to see this be taken out and a move to the downside. So far what we can see is that price has been holding this weekly area of demand. And I think it's very likely we see a push upwards into this weekly area of supply. And then from somewhere in this area here, we'll see the move, a break, and a larger move downwards. Alright, so let's take a look now at oil. And when we look at oil, we've been trying to determine how much profit taking is going to be taking place, and whether a larger move to the downside will start from these areas, or if we are going to get a larger push to the upside. Now, taking a look at the US CAD, we know that going forward we are expecting some weakness in the Canadian dollar. And what typically happens with the Canadian dollar typically happens with oil. So with that understanding, we're going to take a look at the US CAD chart a little bit later on, but remember that, okay? Because right now this candle here, as it was sitting right on top of that ascending weekly trend line, is a representation of this data here. And so what we can see is longs being closed out, okay? Ever since the contract expired, we can see they went from 762, 755, 710, 688. So continuing with their profit taking on longs. We've been saying that we've been expecting profit taking ever since this supply imbalance got contacted, and that's exactly what's been taking place. Okay. So now we look at what's happening with their short positions, and what we can see is that they are becoming even more cooled off than they were here. Alright, so short positions being cooled off and profit taking on longs. Why are they closing so many short positions? If we were to expect a larger drop like this, would we not be expecting short positions to be accumulating? Well, at first glance, that's what you'd be thinking. You'd be thinking, well, they're not increasing short, so why would price be going down? But again, the institutions are dealing with such massive size positions that if they just take profits on long positions, what happens is it causes price to drop. And if they are trying to maintain price at highs so that they can take a vast majority of their long positions off at these highs, they would have to balance it. What happens when you close shorts? It forces price upwards. So as you're closing longs, which causes price to go down, you reduce shorts, which causes price to go up. And what ends up happening is price stays up in a range. So it's some really amazing techniques in market manipulation that the institutions use. They do this over and over again. And it gives us a lot of insight into what is potentially going to take place. Because as this is stalling, as this price action is stalling up here, because the institutions were very aggressive with their long positions, so it's taking them some time to offload those long positions and close those positions for profits. So as they are stalling price up here, it leaves room for the US CAD to make its moves and for them to accumulate their positions on that pair before the eventual weakness in the US and the Canadian dollar comes into play. All right, so keep that in mind. Let's go over to the US dollar. So here's what I was pointing out. So, by just taking a look at the data, somebody would say, well, they've increased their longs and they massively decreased their shorts, which means they want to push price higher. Yes, it looks very bullish indeed. But let's remember something. We had price in a range. Price broke out of that range to test the weekly area of supply. Now, if you remember, about a week and a half ago, last week sometime, I mentioned that I believed that the US dollar was going to lead price action. What I meant by that was, I have mentioned in previous webinars that there's usually one or two pairs that leads the market. Okay, the institutions are usually focusing on one or two, making their moves in those markets, and they typically, but not always, are the cause of the bigger momentum in the overall markets. So, we'll see one or two pairs starting to make a move, and then in the next sessions we start to see the other pairs moving in a similar fashion. But in this case, what happened was, I made mention of this too, that price was in consolidation, and then the US dollar broke the range and broke past daily highs. While the US dollar was doing that, the euro maintained its range, and I said that there's something important about what we're seeing here. US dollar broke out of range, hitting supply, and the euro stayed within range. And now we can see exactly what caused that break of the range. So when institutions increase longs and they also decrease shorts, what causes price to move is that, in that direction. What this causes, I should say, is a move upward like that. So we had them increasing longs, decreasing shorts, which caused a big jump up to hit the weekly area of supply. Now, when we take a look at the euro data, you're going to see that it's telling us a different story than what we're seeing here. Because at quick glance, we'd say, oh, they're preparing to take price higher. Increasing longs, taking off shorts. It looks like that's what's taking place, right? Take a look at the sentiment here. We're seeping slowly into bullish territory. Now, I've been saying for quite some time that we are expecting a bigger move to the upside like this, and eventually even higher. But with the shorts being as aggressive as they were, becoming less so aggressive, we are saying that there's a very good chance that they'd want to drop price, accumulate a bigger long position, offload more of those shorts before a continuation to the upside. I still believe that's going to take place, mainly because of market dynamics. Okay, we have a weekly area of supply being contacted, and there is no uptrend on the weekly chart. Okay, and there is no trend holding price on the monthly. All right, so once the weekly forms a trend, then the momentum will be in that direction. But right now, when price is in consolidation, we have zones that will typically hold in those formations. So consolidation means price bounces from supply to demand. Now eventually one of the other has to break, and that's how we get a trend to form. Eventually this one will be the one that will break. I just don't think that's going to happen now. There is a possibility, as there are always possibilities. When we take a look at the daily chart, we'll see that there's an uptrend that's being maintained very well. And as long as that uptrend gets maintained, then the chance always exists of this area being broken. But it hasn't happened yet, so based on what I am seeing in terms of the technicals, the odds are we get a drop. Okay, so keep all this in mind. I think there's a chance that this increase here was just to cause price to make contact with that weekly area of supply. All right, so now we have to go into the other pairs to see whether they corroborate with what we're seeing here, or if they are telling us a different story. So let's take a look at the Aussie. So with the Aussie, we know that this tested monthly area of demand is in control, all right? And we see a decrease in longs and a slight decrease in shorts. But the decrease in longs was a lot more dramatic, okay? That causes short exposure to increase by 4%, and overall sentiment becomes very much more bearish. Now, we are expecting a push to the downside, but because this is being contacted, it's been holding quite well. I am under the assumption we're going to see a move to the upside to contact this weekly supply, which could therefore cause the momentum to shift to the downside. So increase in net positions, and overall this is going with the theme of a larger drop in the euro, pound, and the Kiwi, and a bigger move upwards in the US pairs. Okay, so let's take a look now at the US CAD. So remember what I was talking about with oil ranging. Okay, so we are falling just short of hitting a weekly demand zone. Okay, we are testing the top wicks of the area, so technically this area is being used right now. But here's the meat of the demand zone right down here. And what we see is a decrease in longs. Makes sense because price ended up dropping, so they're taking profits on longs here. And a decrease in shorts. Shorts very cooled off, meaning they are not expecting a big move like this. And neither are we, right? Because at the same time, when we look at all this, we have to remember 3-month area of demand is in control. Price wants up. I've been saying this for quite some time. And now that a monthly area of supply is in control, pushing price to the downside with that monthly downtrend, all we need is this area here to cause price to reverse. So taking a look at the US CAD, we can see the dynamics are shifting in such a way that we are expecting momentum to shift to the upside at any moment, thus creating a weaker Canadian dollar. So that could take some time to unfold. It could take a week, a couple days, 2 weeks, we don't know. But I'm watching the daily chart to watch for that momentum shift. And as that takes place, it gives time for oil to do what it needs to do. But eventually I think oil will drop and this will go higher. So taking a look at those two charts, we can see that there's a nice confluence happening here on both charts, which increases the odds of price playing out in the manner that I am foreseeing. Okay, let's take a look at the US Swiss franc now. So this is a US pair, and we see longs increasing a little bit and shorts being closed off, similar to what we're seeing with the Canadian dollar, the US CAD. Right? We see an increase in long exposure to 91%. This is getting a little bit overextended now. Typically what happens when we get in such overextended territories is we start to see some profits being taken. But if we take a look at positions, they were very aggressive at the 63s. We're now at 50. We have room to go up. Okay? Reason being that this is 91 is because of such a massive decrease in the short exposure. So there isn't any areas of demand here to take advantage of a move to the upside, so we'd be waiting for momentum shift and new areas of demand to be formed. But overall, this looks great for a bigger move to the upside, which is aligned with the US dollar, Japanese yen, the US CAD, and the US dollar itself. So everything is aligned in terms of a bigger move to the upside with the US pairs. Now let's switch over to the euro. Because as I was mentioning with the US dollar breaking up past its range to test that weekly area of supply, we can see on the euro an increase in longs and a slight decrease in shorts. Okay, and this causes long exposure to increase from 53% to 54%. This came with this candle right here. Now I've been saying that I've been expecting a move like this, and this supports that. But more importantly, when the US dollar is giving us signs that it's going to be bullish, the euro is giving us signs that it's going to be bullish. Very important to know that. The only difference was that this never broke its range. The US dollar did, and then reversed. Okay, so keep that into consideration here, because I think that's going to be important as things play out, especially with this coming Friday's report. We'll get a chance to see what the institutions were doing with their US dollar positions right before the rate being released this week, because we know that this here was a reflection of what they were doing right before the euro rate was released. All right, so more information to come this coming Friday. We'll have a better indication of what the institutions were up to, but I think it's pretty clear what they're up to at this point. Let's look at the pound now, and we see a slight decrease in shorts and a massive decrease in longs. So back in July 3rd, we had long positions at 43, big drop to 32, a big increase to 40, big drop to 32. So basically they're doing something here. Okay, and we can see it's maintaining its range. Only difference is just with the US dollar, we had a break of that range to test a weekly area of demand. So weekly area of demand is in control. Not just an ordinary weekly demand, it was a weekly demand that caused a break of a monthly trend line. So it's very important. So this chart and the US dollar is somewhat aligned, we can say, which reinforces a move to the upside like that. Sentiment is slightly bearish because we are expecting a bigger move eventually to the downside. But right now I think that that bounce from this area here is what's going to be most likely in play. US dollar, Japanese yen, what do we see here? So we see that the institutions took off some longs and then they massively reduced their shorts. Okay, you remember I was telling you they were hedging up here by taking a look at these two positions? Well, that's exactly what they did. They hedged and then closed their shorts as price was dropping. And they also closed some of their longs for profits. Now we're testing this weekly area of demand, so we could start to see a momentum shift and a bigger move to the upside. Take a look. Sentiment bullish, very bullish, 71%. I've been bullish since here. Take a look. Target got hit on this trade setup, entering here at the very lows, and target one hit. I mean, talk about accuracy. The only thing that can give you accuracy like this, in my opinion, is supply and demand, and understanding the institutions and understanding where price is more likely than not going to reverse. So excellent timing with this one. So now we're seeing a very good possibility for a big shift in momentum to the upside. Sentiment is bullish. Taking a look at the US dollar, we see some bullishness coming in terms of the data. The US CAD just about hitting weekly demand. We look at the US Swiss franc and we see them increasing their longs. So very good chance that we start to see a momentum shift and then a bigger move to the upside from this area. Alright, last but not least, we have the Kiwi, and this one's just set to drop. I mean, tested weekly area of demand. We got weekly supply right above, and let's look at the data. Longs reducing and shorts just reducing slightly, but bottom line is shorts are aggressive. So nothing really to see here, but this does support a bigger move to the upside, just like on the other pairs. Alright, and we have larger area of supply here, monthly area supply, and nothing to stop price from doing that. Alright guys and gals, that's your CFTC report for this week. Hope you enjoy the rest of your week. I'm going to be spending some time with a friend of mine going down to an antique auction today. Hopefully we'll pick up a couple nice things to add to the to my home. Until next time, enjoy your weekend, and we will talk to you soon. Take care.